Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 6th of December 2018. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off as ever with a look at the overnight changes and price moves to be aware of. Recording this video mid-morning in London, and so these are prices and changes that are well into the London session. The standout really, the weakness in the Australian dollar, down by around 0.92% against its US counterpart, and we'll look at some of the reasons behind that momentarily. The Chinese yuan has also given ground against the US currency, with the dollar gaining by 0.59% against the Chinese currency. The dollar's also been on the front foot even against near neighbour the Mexican peso, up by 0.61%, and has also pushed back hard against the South African rand, which has fallen by 1.49% against the greenback this morning. Dollar index for its part trading at 97.12 shortly before we recorded the video. So let's take a look at what's on the calendar today and events that may move the markets. I've highlighted events that have already been and gone in the yellow box here. Key amongst those, trade balance data out of Australia for the month of October. And as you can see, the actual balance of trade figure was a significant undershoot of the consensus forecast. To come at 13:15 this afternoon, we'll have ADP employment change for the month of December. Of course, that and the continuing jobless numbers that are released 15 minutes later in the States take on added significance this week, as we have non-farm payrolls data for November tomorrow. At 13:30, we'll also have international merchandise trade data out of Canada for October, and the kick-off of a speech from Bank of Canada Governor Powell, I should say, 20 minutes later at 13:50. Then at 14:55, we jump back over the border to the US for the release of market composite and services PMI out of the States for November, and that's accompanied 15 minutes later by the ISM non-manufacturing PMI survey for November. At the same time, we'll also get an insight into factory orders data for the month of October across the USA. Then it's the turn of the Ivy Purchasing Managers Index data for Canada for the month of November, again at 1500 GMT. And then we pause until 17:15, when we'll have the second of our central banker speeches of the day, FOMC member Bostic speaking. And then at 23:30, FOMC member Williams will be speaking. That's not the end of it, though. Perhaps the most important speech of the day coming at 23:45, when the Fed Chair Jerome Powell will take to his feet and speak. Okay, breaking news and comment then that's caught my eye overnight. And firstly, Australia's balance of trade data undershoots forecast significantly, though exports from the country grew to a new high. European equity indices have sold off on renewed trade war concerns, and the reason for those concerns is immediately obvious in our next headline. The Canadian police have detained the chief financial officer of Chinese tech firm Huawei at the request of the USA. This relates to sanctions busting accusations against Huawei from 2012, when they're said to have supplied equipment to Iran. But nonetheless, that arrest or detention has served to raise trade tensions across the globe. Theresa May, the UK Prime Minister, has refused to rule out delaying the votes on Brexit, which was scheduled for next Tuesday, according to the Financial Times. Okay, food for thought then, and something to take away with you into the trading day and beyond. And why not think about this? Goldman Sachs has highlighted this morning in new research that US interest rate futures are pricing in just 1 and a bit rate rises from the Fed in 2019. Goldman's had previously forecast as many as 5 hikes for 2019, but now say that the outcome for rate rises in the US is data dependent. And here's the chart that Goldman's drew, I should say, to plot what they're, or show what they're talking about. One hike here, 2 hikes here, and the current probability is based on Fed Fund futures. So we're here in no man's land. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And do take a moment, please, to read this risk warning thoroughly. Thank you for your time.